Welcome back to another weekly market and financial update. I hope everyone had a very healthy and safe 4th of July holiday weekend, and I hope everyone, especially in the Northeast, is staying extra cool. In northern New Jersey, where I'm at right now, it's in the mid 90s and it is hot. So I hope everyone's doing what they can to stay cool and relaxed during this heat wave. So diving right in, we just hit the end of the second quarter, and I can't believe we're already pretty much in the middle of July at this point. And as the quarter continues to wrap up, especially from a corporate earnings standpoint, more and more reports will start to come out. We don't really have any data yet. Again, a little bit behind due to the July 4th holiday. I would imagine probably next week or the week after that, we'll start to see some corporate earnings be released to the public, and that data can be analyzed, and we'll talk about it a little bit more. Knowing what's going to happen with corporate earnings is super important because at least businesses in America have proved to be extremely resilient even under some intense economic circumstances, mainly around inflation being as sticky as it has been for a long time. So markets, what they do typically is how they factor in their prices and their valuations is markets are very forward looking. So I'm at a point now where I feel that the market has priced in a lot of the good news that we've already received already. They've priced in the anticipation that the Fed will likely lower rates at least once by the end of the year. They've priced into the fact that companies overall have looked very, very strong. So if corporate earnings can remain very strong and continue to surprise us, then I think the stock market will continue to look healthy. If corporate earnings start to have somewhat of a pullback, it wouldn't be overly surprising there. I think most experts and analysts are anticipating some volatility in the coming months. Again, there's going to be some uncertainty around the presidential election later this year. Labor markets are softening. Even with the Fed saying they're going to lower rates a little bit, inflation still has been really, really sticky. So consumer spending has continued to draw down as prices of goods and service continue to remain high. So I wouldn't be surprised if stocks tend to have some volatility or maybe even some corrections in the third quarter or fourth quarter later this year. But if corporate earnings can continue to surprise us, then I think we should have a relatively nice second quarter, and a lot of investors will feel good opening their account statements, at the end of June and at the end of July once they're released. Another factor of the markets that we didn't talk about, right, are bonds. So bonds, I think, have really become more attractive, and folks will say, Ben, bonds are way down, and yes, I agree. But rates on bonds peaked at the tail end of last year. And as rates start to come down, when the Fed lowers their rates, a lot of these high yield savings accounts that folks are taking advantage of, you can just log on to your computer at any point and see that cash accounts are yielding 5%, 5.25%, 4.75%. It's very, very easy to take cash in a checking account and stick it into a high yield savings. As rates start to fall, the bond rates will remain relatively attractive. A lot of corporate bonds, high-yielding bonds right now are sitting right around 6.5%, or even 7%. And as those rates are locked in, because these companies have already issued their bonds, you'll still be able to retain those rates even as cash accounts come down. So I think bonds are still going to be a very attractive option to investors looking for systematic income, and a great way to do this is purchasing bonds and then holding them until maturity, or waiting for interest rates to drop. And then as the values of the bonds go up because they have an inverse relationship, that will also look attractive to an investor within their portfolio. So if anyone has any questions on bonds and how they can incorporate this into their portfolio, I know they've been really, really scrutinized over the last couple of years with high rates, but I think bonds will become more attractive. So if anyone has any questions on this, you're always welcome to reach out to myself or the team. Look us up on our website, visionretirement.com, and all of our information is there. So a lot to talk about in the coming weeks, especially as corporate earnings are released, and I think there's going to be a lot of great data for us to discuss. So stay cool again in the heat. I know I've mentioned it, but it is hot. So hope everyone enjoys the rest of their week, and I'm excited to talk to you in the coming weeks about more data that's going to be released to us. Stay cool, stay safe. Talk to you soon.